Hi, welcome to this episode of Founder's Journey. And today I have Charles Merritt, and he is with Buddy. What a great name to have for your insurtech company. Charles, welcome to this episode of Founder's Journey. And we met like a week ago, right?
I think that's right. Thanks for having me,
Yeah,
Jeff.
we just met last week, and we actually met at insurtech Virginia in Richmond, Virginia, thanks to the guys over at Shinglestone and also Dylan Brand for putting on the event. It was cool to have an insurtech event right here in my backyard,
That's right.
and I got to do a short spotlight interview with Charles, and now I'm like, why don't you come on my podcast and really talk about your company, Buddy? And here we are. So I'm gonna go ahead and turn the mic over to you and tell us about Buddy. But before Buddy, how did you get into insurance? I mean, how did you get into insurance? How did you get into tech? And what was the inspiration that led to Buddy? Because you saw this problem that other people weren't solving. So the mic is yours.
First of all, thanks for the interest in what we do at Buddy, and thanks for being a great part of the insurtech ecosystem. How did we get here? It's such a long story. I don't know that we'll fit it all into one episode. But the way that I came to insurance, I guess I'll start there, was somewhat by accident, somewhat by sort of just following the wave that I saw going through other pieces of the economy. I'll back up a little bit. I started my career very early on in the media world, working in production, and at the time, we saw this technological shift that really democratized, actually what we're doing today, right? Like making a video. So if you think about doing this, 20 years ago, even, that's not that long in the greater scheme of things. It would be really expensive to record something at this fidelity, with remote locations, live syncing, decent enough audio for broadcast. Like all of that would have been massively expensive. And so, in 2007, I was working in cinematography, and the first one of these things came out, the iPhone, right? And that just fundamentally transformed who could make media, who could tell a story. And the things that I loved about media production was really what happened when you told a story. What effect did that have on the viewer? What happened in their life? How do they reframe their world? How do they make different choices or see someone else differently, perhaps after they went through that experience of seeing something you created or you worked on? And that was really what brought me into the idea of media production in the first place, was that storytelling, the transformation you have in people's lives. And through all of the things that happen early in your career where, you try something, you're like, oh man, something about this isn't right. I'm going to try something else. I hated living in Los Angeles, when I was 22, because it's, expensive. You have to drive everywhere. And like, I didn't love the way that my life was starting to come together there. So I moved to New York, where I felt much more comfortable. I've been visiting New York for my entire life, and just feel totally at home on the East Coast. So I got involved in an online media startup when I moved to New York City. That company ultimately was not one that took off, but it allowed me to start to see some of the similarities between creating a story in media and building a software product that allowed for people to also change how they viewed the world, how they interacted with the world. And so those two things actually became really equivocal for me, where what I put into someone's hands, what I worked on and put into someone's life, allowed them to have a different outcome for them. And so that was really when this light bulb kind of went off for me about what is it that we're even doing here as humans, right? Like, what are we building? What are we creating? What do we want to put in the world? And from there, I was very fortunate to be able to go and work at a phenomenal company, and it's early in its history, at Kayak, where I had this nexus of skills that I guess put me in a very small oversecting set of circles in the Venn diagram, where I was fluent in German, had a creative background, and had pretty good analytical chops. Before I ended up getting into media production, I was a poli-sci major doing a lot of like quantitative analytics of language type stuff. And so it was just a very interesting skill set that they needed to build out German digital marketing campaigns. And so being there in the sub 100 employee days at Kayak, I was able to like see what the founders did, work with like the founding team directly, and really understand like, okay, this is actually what it takes to transform the way really an industry operates in the eyes of the consumer. And so that was just a phenomenal formative experience that really cemented the entrepreneurial bug for me. So I'll pause
I,
here. I haven't gotten anywhere close to insurance yet, but
yeah,
I'll hand it back to you.
I have like random question when you said I learned German.
Mm.
What was the inspiration behind learning German?
Yeah, so in 8th grade, the school I went to had a language requirement. And there were 3 languages you could choose from. There was Spanish, there was French, and German was a 3rd language. And all the cool kids took Spanish, like, and I wasn't that cool. And then all like the hardcore, really, you know, academically driven, sort of, I don't want to use any pejorative terms here, but those who might spend a lot of time to try to get the A in school, and that was the most important thing, they all ended up in French. And then all the kind of like weirdos, misfits, we ended up in German. And so that was really, what got me into the language as a kid. I ended up going to a high school that was dedicated to government and international studies. And so we actually had a 6-year language requirement in a 4-year high school. So I took 4 years of German and then a few years of Spanish while I was in high school as well. And so by the time I got through that, I took the German AP test and I was like, man, I better keep going. So I ended up taking German classes all the way through college. And the Germans, of course, have a governing body of their language, the Goethe Institute. And so I took my ZFB from the Goethe Institute, which is basically a German language qualification for business settings. And so I ended up getting that. And I think it was something that I give both of my parents a lot of credit for, where they didn't say like, hey, go learn this language or go learn another language. They said you need to like become highly proficient to fluent in something other than English. And so I am, to this day grateful for some of those sort of orienting moments early in my life, because lo and behold, it allowed for me to get a job that has enabled me to go on and do these subsequent things by being able to see up close some really incredible work from some incredible people building a company that all of us know probably in and around the tech and travel world, and many of us love to this day.
So in the future, when I want to do like a Porsche or BMW European delivery with the Oktoberfest, I should be calling you to be the wingman to go with me.
That's right. There's certain models of coupe that I won't fit in very well, but
You're
I'm
a tall
happy to
guy.
go. I'm on the above average side. I've actually done the BMW driving school here in South Carolina, which was super fun. So I would happily go over to Nuremberg and drive on the ring with you.
Nice. So the perfect trip will be do the European delivery, visit the factory and museum in Munich, and then have it shipped to Spartansburg, South Carolina, do the
There you
whole
go.
factory museum track there, and then drive back. So any
There
of
you
my
go.
BMW people out there, we know who to call when we want to do the European experience.
That's right. I'll happily go driving with you.
All right. So I'm sorry, we sidetracked because that was super interesting. Continue, please.
All right. So I'm going to try to compress this next part of the story so that we can get to the insurtech piece, because we could go on all kinds of sidewinding journeys from here. From Kayak, basically, I went and worked at another travel tech company, Jetsetter, which ultimately was acquired by TripAdvisor. And I decided I wanted to go to grad school. So because I'd really fallen into sort of this marketing work and had never taken a single, marketing or like corporate communications class or any kind of class like that in my life. So I came to Richmond and went to the VCU Brand Center for grad school. And while I was in grad school, I ended up working with a gentleman who was a professor actually at UVA, and we built out an incubator for early stage companies focused on consumer tech, consumer communication, that was funded by the Interpublic Group. So we were working closely with the team here at the Martin Agency, who's owned by Interpublic Group, and we got to work with all kinds of different startups. Coming out of grad school, I went in-house with a fintech company called Knox Payments. I had been advising them for about a year before they invited me to join them as their CMO. That is a company that ultimately didn't succeed. However, most of the folks who were involved in that project have gone on to start other companies that have been quite successful. And we are hopefully going to add another logo to the quite successful list here at Buddy, coming out of the Knox payment experience. But what was really important for me
This is like a Richmond version of the PayPal Mafia.
yeah, it kind of is. Except the first thing didn't work, unlike PayPal. So we, coming out of that, I think the big takeaway from me was the things that were true about communication and building consumer-facing technology experiences, I actually found to also be true getting into some of these deeper financial services kinds of world. So we were pretty close to the metal. We were sending batch sheets to the Fed to process ACH. And so being curious about how all of this works, that's sort of a common thread for me everywhere I've ever been. But I saw that there were some things that I had learned about sort of product thinking, around product marketing, and really how clear vision around what outcomes we want to generate for people, and the ability to articulate that and then create a shared understanding of the future we want and bring everybody along to that. That kind of became the skill set that I had developed across a couple of different disciplines, and seeing the effect that moving people's money more effectively had on their lives. I was like, oh my God, everyone needs this, right? And so I just kind of became, really fascinated by the underpinnings of the way that financial services, transactions, card banking, insurance, all of these things that are the instruments of how we as humans share value, share risk, and move it around the world, how those technologies enable us to go do the things that move humanity forward, are meaningful to each of us in our personal lives. And so, just getting really curious about those things started to crack open the door. And when Knox ultimately didn't work, I ended up going back in-house, as part of the IPG group here in Richmond and the Martin Agency, consulting for them, working on some of their business. They have some great financial services clients. So, Discover, TIAA, and then of course Geico, right? So the Martin Agency is the originator of the Geico Gecko and all of the lovable characters that have inspired a whole generation of insurance marketers to create their own flavor of avatar out in the marketplace. What I found myself doing was really working with a lot of these larger financial services companies, thinking about a customer problem that they had taken to an ad agency, and recognizing that there was this huge technology product opportunity in one way or another for most of them. And I worked really closely through that whole period of the incubator and consulting out of IPG with David Vogelier, who is now my co-founder and CTO of Buddy. And we were building all kinds of product prototypes for these companies to help them solve weird consumer problems. And a couple of things were true. One is that we really loved working together. We had sort of this great creative partnership in terms of strategic product thinking. And David's one of the most brilliant inventors and engineers I've ever had the privilege to work with. There's really no technical problem box that you can put him in that he can't figure out how to get out of. And so our relationship really became that, like defining the technical problem box, thinking about what a good solution needs to be, and how are we going to talk about it, sort of ended up being my sort of strategic product side of it. And then David would sort of pick up the product engineering half of that suitcase, and go build either like an incredibly fast way to prototype some complex financial services, UX, or build something that no one thought was possible and have it stood up and working in a staging environment. And so, I was like, all right, man, like I personally, I was bitten by this radioactive entrepreneurial bug years ago, and I'm never not going to have that feeling. I got to get out of here. Like I gotta go find something to build. And having watched the wave that went through, we talked about PayPal, so like payments, card, lending, banking, that wave was clearly headed for insurance. And this was sort of mid 2015, 2016 era. And so it was almost just sort of writing on the wall, kind of obvious of like, let's look over there. And as we started to look at what was going on in that world, there were a couple things that stood out to us. One is how much of the global economy and how many people are affected by insurance. It is near a universal technology in one way or another when it comes to financial technologies. And looking at, I'm talking about insurance itself as a technology for sharing risk. We'll start talking about software and bits and bytes in a minute, but as this is like this fundamental idea that you and I and our 10 friends can agree that we're going to sail our 12 ships and we're going to divide each of our goods up and split them across 12 ships. One, so that we all have a shared interest in succeeding. And two, if something happens to me, you still have 11/12 of my goods showing up, to my merchants, and my supply chain isn't fully disrupted. And so this idea of sharing our lives to create these better outcomes for everyone, I just kind of like, I couldn't put that down. And we thought about a couple of different ways to get started, but we, having spent a lot of our careers, most of our careers in software in one way or another, we knew that we couldn't just build a technology and go sell it to an insurance company in a vacuum. And I'm usually pretty off the cuff about this. So my usual answer for this is like, it's a long sales cycle. We got to eat our own dog food on the product. You build better software, and like I don't want to wear a blazer and khakis and go knock on doors of insurance companies to try to sell them enterprise software. The other part of it is like we also just like didn't really know people who worked inside insurance companies who like, how are they even thinking about this problem? Because I can look at it from the outside and say, just build e-commerce software like this. There's a bunch of other, digital goods that you sell in other channels. Let's just go replicate that for insurance. But we didn't have that inside knowledge. And so we actually ended up having a gentleman called Jay Paul, who was also part of our founder team. Jay had run an insurance brokerage, which they sold to BB&T Bank, and then had been part of some specialty brokerages subsequently. And so we're like, all right, let's build our own insurance product. So, Jay's Rolodex with, the insurance industry allowed for us to go and solicit a bunch of carriers and reinsurers to say, hey guys, we want to build this crazy insurance product. So we built an insurance product that was the world's first on-demand accident insurance product, because we're all skiers, snowboarders, climbers, mountain bikers, and we had seen the GoFundMe starting to come around for people in those communities who couldn't afford the cost of an accident. So we thought that if we built a futuristic accident insurance product that was like real-time available, you could get as little or as much of a duration as you wanted, buy it same day, all that kind of stuff, that we would inadvertently create an insurance product that look more like the future of insurance, and then we build the software to power it, and then we'd end up with the software that powered products that were the futuristic insurance products. So that was how we got started. We went to Techstars and we launched at the end of 2018 at the Techstars MetLife insurtech cohort demo day. So I'll pause here because a lot happened after we launched, but that's how we got to insurance and got to insurtech.
So much to unpack. Okay. Given the prior roles that you guys were at, the Martin Agency, in your company with IMG, you guys were making pretty good salaries. I mean, those are like significant roles that you guys held. Did you guys burn the boat or did you guys work on this project on the side, building out the slide deck, building out the business plan, building out the pro forma,
Yeah.
building out the MVP? I mean, give us that deep dive. How often were you
Yeah.
guys taking out the time to meet? Because like if you guys are
Mhm.
working 40-hour a week and this is being worked on the side, that's like 20 hours of each day. Everybody got
Yeah.
kids, happy hours, and spouse, right? So what's that period like? Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
I jumped first at the end of 2016. So 2017, January 1st, I went and filed our paperwork, got our EIN, got a bank account. Sorry, it's already Tuesday and I'm a little fried. And so I kind of got everything set up right out of the gate. I definitely burned the ship. David stayed at Martin, and I'll tell you a funny story about that in a minute. I started building out the decks, pro formas, got a co-working membership, put together some seeds and some friends and family funding on a safe note, and basically just said, took the YOLO bet, right? And I was like, this is going to work. And David stayed at Martin for, I think, most of that year, into the beginning of the following year, and ended up, he was helping, and we were working kind of, weekends and evenings together. But a lot of it at that point was really about sort of building out the pitch and the vision. We put in this iteration of the business, we were actually using a chatbot. So David built a prototype natural language understanding system that we integrated with Facebook Messenger and was dummy selling insurance to people via chat. And so that was kind of what we built our original demo around. And so a lot of 2017 was really me with Jay's support, figuring out how to go get capacity, and then how to bring on a partner to help us do the product design for the insurance product. Once we got Lloyd's to sign on, we were able to raise a little bit more money. And once we did that, David jumped, but only after he went to Cannes and cleaned up 12 gold lions at Cannes. So I was streaming, watching watching the Cannes Lions Award in the co-working space, like sitting there with my free cup of coffee. And, I know that he's about to just go, take his 12 gold lions and go drink, every last drop of rosé out on the Mediterranean, and then quit his job the next week. And so that's exactly what happened. Is he took his statues and then left. And so I'll plug this because there are two reasons. One, I think it's a phenomenal piece of work that my colleague and friend David did, and two, it's actually for a great cause. So if you have never seen the campaign called "The World's Biggest Asshole," you should go Google "World's Biggest Asshole" on YouTube. And I won't tell you what it's for because that's part of it, but you should go watch that because it is for a phenomenal cause. And it had the effect of increasing the response rate for the customer by orders of magnitude for something that all of us dearly need as a society is super important. I won't spoil too much of that, but please go look that up. So anyway, I jumped first.
I have it hold
You
up
got
on the
it?
side. I'm like so tempted to play, but we're not going to
Yeah,
interrupt the podcast here, so we'll keep going.
yeah. Save it for later. So I jumped first, broke David out, and then when we got into Techstars, Jay jumped out of his brokerage job. So we were all able to go to Techstars together in 2018. And the process of building an insurance product, absolutely wild. It was a quantitative exercise at first where we went and did all this research into data into like sports accidents and sort of competitive products in the marketplace, which were like not really competitive, like supplemental accident policies that would exclude you if you did anything fun, basically. And so we put together a theory of what the product should look like. We worked with a third-party actuary to put together a rating manual. We took that rating manual to Lloyd's. We had a broker over in London help us, make some introductions, and I mean, it was the kind of thing where we met people who believed in us, who were just crazy enough, and our demos were well polished enough, which is sort of the secret for us, is like coming out of advertising and media production. Like, we can make things that don't look real with basically no budget. And so being able to do that was a phenomenal pitch tool for us in sort of all parts of it. And the first things that we saw in that process, were really around like customer behaviors and sort of market dynamics. Like, it basically instantly launching the first product the first day, we were like, oh man, this is all wrong. But that's totally the way a startup goes, right? That's the way anything new goes. You put it in the market and you're like, oh God, we really fucked this up. And if you need to beep that, I can give you a beep version. But
Hold on. What was the first product?
so it was the on-demand accident product for sports accident. And it was on the first day, the real issue was like no one wanted to buy insurance via chatbot. So the insurance product itself actually was great, and we ended up running that for a couple of years. And the losses on it were pretty close to kind of what we thought it was going to be. So there were some interesting dynamics that I think made some people with a more conservative view of insurance, kind of made them scratch their heads a little bit. But we just sort of looked at it as like, look, basically what we're saying by selling someone a day-long insurance policy for an accident is that they need to pick the day they're going to get hurt. And if you look at supplemental accident policies, like so many of them are just paying out claims on like slip and falls in the shower, or, like home renovation accidents, stuff like that happen when people aren't expecting it. Like, that's the very nature of an accident, right? Is it sneaks up on you. And so, if you think about that kind of policy and think about like playing roulette, right? Like, Aflac's they've got a nickel on every single day of the calendar, every single number that ball could land on. Aflac's covering you, man. And what we're saying is like, no, you only get to pick one number. And by the way, we're going to charge you, a significant markup on that daily rate because we think you're concentrating your risk there too. And so from a loss ratio perspective, the exposure really was like almost counterintuitively good. There were some elements of the product design that I think we would modify if we were going to build it again, but we're unlikely to build it again. So the real learnings there were around the distribution, right? It was, how do we acquire customers? What's the story we tell them about a new type of insurance? And I think, one of my like forehead slappingly obvious things now that I just like, didn't really process at the time. I was like, well, this seems good and our friends seem to like it. So like, let's try to roll it out, which is kind of how you would roll out stuff, especially in like a consumer tech world, right? But thinking about the amount of investment and time that it takes to build an insurance product from the ground up is like, oh yeah, we probably should have thought about how we go learn about what the market needs are ahead of time, in terms of, do people even understand what this is for? And I think that was one of the insights that we had pretty quickly. It was like, oh, we need to do a lot more explaining of what this is. So, you saw us like, we went and pitched Outside Magazine, pitched a lot of, folks in the outdoor active lifestyle community to start telling the stories of what happens when you get hurt. And that enabled us to then kind of create the air cover for what is this insurance product, while we then went, from the bottom up and totally re-engineered how we were selling it.
You build your first product, and then
Yeah.
what made you say, hey, you know what, let's go pivot and build a payment solution? Like,
Yeah.
where did that come from to say,
So,
because it's very different. I mean, you jump into like complete on the other side of,
yeah.
like an AR software solution model from a MGA model.
Yeah. So, remember when we started the story, right? The theory of Buddy was always around helping, people better share risk, right? Because we want to make that more easy to do technologically. So when we were building the platform for the original insurance product, David and I kind of agreed, like, hey, it's going to be a little harder, but we should build this in a way that this software is agnostic as possible to the type of insurance that it's powering, because we think we might want to use it for some other stuff later. And so that was really baked into our philosophy from day zero. Now, what we learned when we were taking the on-demand accident product to market is that we could reliably acquire customers when our insurance product was part of a registration and sign-up process. So we ended up building the sort of distribution layer so that people who run booking platforms could quickly integrate our insurance product into their registration flow. And, lo and behold, it was good, right? Like, we could say, hey, between 5 and 10% of people who see this box are going to check it and buy the insurance policy. So we moved into something that was really, very analogous to the way travel insurance is sold. So sort of looking back to where I started in travel tech world, it's like, okay, where else could we put this? And at the end of 2019, we had traction on distribution technology, so we could reliably acquire a customer and insured. We had the learnings of what do the registration platforms, the folks who own venues, the apps that manage active lifestyle stuff that we want to be in, what do they need? Well, they like our technology, but they want the insurance product to be available in every geography they operate. Because if I have a platform that's, let's call it US, because we're in the US, that's US focused, and your insurance product is only available in 7 states, I am not spending my developer time to put your insurance product, I don't care how good it is, into my registration flow, because it's not creating experience parity for my customer who is doing something that's not buying insurance. Your insurance is, just there. Maybe it gives them a little extra protection. Maybe I earn a marketing fee, but I'm not disrupting my booking path for just 7 states, right? So we heard that feedback regularly, loud and clear. And we said, all right, we're going to go file this product nationwide. We raised some money at the end of 2019 to do the filing and to do a rollout. We actually brought on a domestic carrier here in the US who had some expertise around personal lines accident insurance, and we did the filing. So March 2020 rolls around, and all the places that people get together to do fun stuff closed for 2 years. And when your business strategy is predicated on being integrated into the places where people get together to do fun stuff, you have to do a little soul searching.
I want to pause for a second and go back.
Yeah.
At this point, you guys raised which round? Pre-seed, seed?
So it was a pre-seed. So we had
Pre-seed.
raised like
Okay. Friends and family?
So we had a little bit of institutional capital as well.
You did. Okay.
Angel institutional. So not just friends and family. So this wasn't
Virginia-based or insurtech based?
A little bit of local and then also insurtech. Like we have never constrained our capital stack to Central Virginia, because that's not a winning bet if you want to build a venture scale company.
Oh, yes.
But that's a different podcast.
The size of venture-backed companies in insurance is really, to all the VC out there listening, Virginia exists and there's builders in Virginia. I feel like we never get the love and attention. All right, that is a different podcast.
Yeah, so there's the we're out of the geographical reach of a lot of the big markets, and capital that's here that would invest in a private company also doesn't know what a VC model looks like, and so they will absolutely they will not give you market terms for your deal, and they will not use market mechanisms to invest in an early stage company. And so you end up getting over a barrel when you try to leave the geography and go raise more capital outside.
I have to pause for a second. There's a lot of founders I interview. They have good ideas, good team, solving good problems, but they lack the understanding of institutional money, building the relationship with VCs, and understand the mechanics on building C Corps, QSBS, QOZ, QOF, all those little things that give them, tax, R&D, tax credit, all these little things that give a founder advantage and try to scale hyper growth. Where did you obtain your skills from?
Always, I guess, is the answer to that. I have worked with some phenomenal founders, for some phenomenal founders in the past. Or actually, early when I was in college, I worked at a private equity fund of funds. And so they were raising from institutional capital and investing in VCs. So like in 2000, 2001 and 2, they were like investing in like Sequoia and General Catalyst as LPs. And so, my job was to review track records of VCs and actually at the time I was trying to use Wolfram Alpha mathematics to predict fund results compared to like a normal, a traditional statistical approach to see if Wolfram Alpha would provide us with a better way to predict fund outcomes based on the data input. So that's what I was doing at that fund of funds. And so that allowed me to, get some upfront exposure to how that world thought and worked and the types of returns that as a founder you were expected to show up with to go raise institutional. That was early exposure into sort of the languaging and, sitting into some meetings with some VCs who are raising money from that fund of funds that, I kind of look at like who those people actually are now. I was like, oh man, I like wish I had known I was in the room with that person at the time. Like, when you're 19, 20 and you're sitting in the room, like, this is so cool. And now, I'm turning 40 next year and I'm like, shit, I wish I had kept that person's business card. So
Well, that's why we have LinkedIn, right? LinkedIn gives us a great people.
That's right. So yeah, I mean, a lot of it is my career has largely been in venture-backed companies. And so I know what it feels like to work at them. I know lots of founders who graciously answer my emails and text messages, and who will talk through these things with me, who, and I also have, personally, I'm always okay being the dumbest person in the room. So like, I'll ask a stupid question. If I don't know the answer, like I'm sitting here with, whoever I'm sitting with, and like, they might think I'm an idiot, but I'll know what they know about this at the end of it.
Man, that's a fantastic, humble approach to everything. And I think a lot of founders, they get caught up in, I am smarter than everybody else in the room. And the best ones, the one that advance, excel, are the one that just, always learning, constantly learning. So that's a great trait.
Thanks, man. I was lucky to have good models growing up for how to learn and how to be around people. So I'm very grateful for that.
Now that you guys are payment software,
so how did we pivot? What happened?
Yeah, I took the time actually, I have another monitor over here. I've been check on your website. It's pretty cool.
Yeah. So let's go back to the pandemic and I'll pick up there, because then I'll spend 3 minutes on how we got to the pivot, and then we can talk about what's going on now. So, you'll recall in our story, our distribution for our on-demand accident had dried up. We actually had this moment where we all went home, we were working from home, and there was a feeling of like, is the world ending? And if you go back to like March of 2020, April of 2020, I think a lot of us might have had some version of this, of like, what's happening, right? Like, and we kind of laugh it off now, but somewhere inside of there, we do have those images of, thousands of bodies being stacked who were victims of the pandemic. And that's what we were seeing as our reality. And you don't know if it's going to get better or if it's going to get worse. And so, we looked at ourselves and like, look, we're an insurtech company in Richmond, Virginia. We're half a dozen people. We're, really like, just on the cusp of getting revenue. and we're by no means profitable. There's no future that's guaranteed for this company. So what we did was we said, what can we do with our skill set, and what can we do with what we have? And we ended up building an advanced directive system based on our core software that we got a grant from the local health system here in Central Virginia to help people fill out advanced medical directives who are coming in to be intubated. And so we spent like 3 months doing that. We didn't do any insurtech work. We just said, how can we help? Because we're not doctors, we're not first responders, but this was a thing that we could do. And we learned a lot through that process. I'll skip the Cliff's notes, but imagine taking your core software system and doing something completely different with it, and imagine all the things that you're going to learn about architecture, about product. And so we learned all those things. And then as the world started to open back up, we just were curious about what do our contacts in the industries that we're operating in, so insurance companies and carriers and brokers, and then on the other side, people who control points of registration and distribution, what are they thinking about? And they were thinking about cancellations. Many of them had lost their businesses because all these tickets they sold, that people wanted refunds. They had already spent the money. It's a tough game. And so we had a lot of people who wanted cancellation insurance. We asked the carrier we were working with if they had it. They said yes. And we were able to onboard that product into our system, having never seen it, have it up and running, have our distribution software in a registration platform and transacting in just 10 days. And so everyone on the carrier side thought that we were, using some kind of black magic to do it. The distribution platform was like, man, that was really easy to use. And we looked at each other and we're like, hey, I think this is the business. We should figure out how to do this for everyone. And so that was the moment when we pivoted, internally. That was our sort of psychological moment when the decision was made. And then it took us 1.5 years to do the actual work of turning the company. So we ended up actually tearing down all of our core systems. We wrote our own data language for insurance. We built new application layers on top of it. And then at the beginning of 2022, that was when we did the official pivot. And so Buddy is now an enterprise software company that enables insurance companies to sell any type of insurance on the internet. So you can do all the flavors of e-commerce that you might want to do. So direct, broker enabled, embedded, and we can do that for any line of business, no matter what kind of underlying system your products are running on, including just paper and spreadsheets. So that's what we do today to help increase the access to and availability of insurance in a software world.
Watching your website while we're having this conversation, I'm probably going to end up introducing you to a couple founders and co-founders I've been meeting the last 2 or 3 months. So I think we'll have some more conversation outside.
Sure.
So going forward, if I have you come back next year, I see that you guys have on Crunchbase, you guys raised $7 million. What's your next raise, and what is your next goal of the stage of the company you guys want to hit?
Yeah. So our next raise will be next year. So we will be raising an A round. And the goals for us really for the foreseeable future are to just bring more insurance products into our platform. We have some internal product goals that we want to hit, including one that I think will be very interesting to talk about next year. So that's sort of my teaser. Right now, I think our strength in the market is really a couple things, but at the end of the day, we enable insurance companies to get their insurance product selling on the internet faster than anyone that we have ever seen. So it can be as fast as days to get up and running. And so if you think about how long it might typically take an insurance company to do a digital transformation and then a downstream integration, it's 12 to 24 months for some companies. And so we rapidly or massively shorten that time. And that's really our superpower today.
Yeah, I'm going to introduce you to some guys. There's a lot of guys I know have ideas, and there's could be
Great.
some good conversation there.
We also learned, I think the key piece right here, and I know we got to wrap up, but we learned that our team is exceptional at building e-commerce software that facilitates a great consumer experience. And we also learned that insurance companies and brokers are exceptional at what they do, and we shouldn't try to replicate what they do. And so we really want to be the tools that they can use to develop new skills and abilities in a new world for them, because that's where we've spent most of our careers. And so, you know, we're really looking at what we do today as sort of, you know, meeting people who know a lot more about what they're trying to do, but having sort of the one special tool that they need to do it in a new way.
That's really good. Charles, I'm looking forward to maybe seeing you at the next event. You know, since the last event that we went to, the whole event was about AI. So
Yep.
I wouldn't be surprised the next event in InsurTech Virginia is the same thing. And, you know, if we open that conversation, that's another hour off the book.
Oh yeah.
So
that's right.
Hopefully in the next 9 to 12 months, if you raise your Series A round, definitely get back here and we can talk about it and then just go through the journey together on the podcast.
Sounds good, Jeff. I'm going to close with a question for you, actually. Who do you want to get on the podcast who you haven't been able to get yet? There
was a lady that I met at InsurTech Virginia. She used to be with Progressive and Compare.com. Can't remember her name right now. She was chatting with Jennifer a lot. I think she have an incredible story that we can tell. So that's probably the next one. I did message her on LinkedIn. No, I'm trying blank. Like Ellie or
I'll take a look and see.
Yeah.
If I can make any connections, I'm happy to do it.
You know, I think there's a lot of interesting people came out of Virginia, and I tell story of everywhere else, New York, California, tons of California stories. And I think there's a lot of story I can tell right here in our backyard.
You know, it's not a bad backyard.
So anybody you can think of, right? Anybody you can think of, my circle, just my circle. So, you know, anybody in your circle you can think of, you know, send them my way.
I certainly will.
Well, Charles, appreciate you coming on the podcast, and looking forward to connect again.
All right. Thanks for having me, Jeff. Take care.